Welcome to your Farm and Home Show. My name is Joanna Coles, and this morning we're visiting with Bill McCloskey. He's with the Kentucky Office of Ag Policy as Deputy Executive Director there. And one of the projects I know that we've worked a lot together on is the Kentucky Ag Finance Corporation.
25 years ago, when the Ag Development Board and our ag leadership met and realized we were going to have a windfall of funds coming in as a result of the Master Settlement Agreement in 1998, they did recognize the need for capital access, or access to capital for our farmers, specifically beginning farmers. And so we started in 2004. We transferred the Kentucky Agriculture Finance Corporation. At that time was basically dormant in the Department of Agriculture. Transferred over that time, as you know, we were part of the Governor's Office of Ag Policy, and we started transferring money into that program and developing a loan program. To date, fast forward, we're $160 million we have invested in the Kentucky Agriculture Finance Corporation with over 900 loans on the books, and we've only written off about 4 loans of the 1,800 loans that were approved. And we've been able to do that and make it an efficient process by working with the lenders in the state. The way that would work, if any farmer engaged in agricultural production or agribusiness, they can contact the lender that they work with, that they have a relationship, and on their behalf, the lender can make a request to the Office of Agriculture Policy, and we present the applications to the Kentucky Agriculture Finance Corporation Board of Directors. It meets the second Friday, and their farmers are eligible half up to $250,000 for a project. And I mentioned earlier how we tie into local lenders. We didn't want to compete with lenders. We want to utilize that network of lenders we have across the state. So they make application on behalf of producers, and they're eligible for half the cost up to $250,000. And this is a key point, is interest rate for our funding is 2.75. It's real attractive right now with the interest rate environment we're in. We're seeing 7, 8, and 9%. So to be able to have our funds to help supplement the originating lender on a project, our priority of both the Kentucky Ag Finance Corporation Board and the Ag Development Board is the beginning farmer. So 70% of our portfolio are loans to beginning farmers here in Kentucky. Our definition of a beginning farmer is an individual hasn't owned a farm longer than 10 years. They're eligible for ag finance, working with their local lender. And what's eligible is real estate, purchasing the farmer. It could buy into a family farm as a partnership. It's livestock, equipment would also be eligible as well under the beginning farmer. For the more established farmer, they could apply for funds through or loan through the ag infrastructure loan program, working for a lender, and that's only going to be eligibility for capital improvements on the farm, grain bins, greenhouse, shop, any ag structure would be eligible in infrastructure. Back to our beginning farmer, where we concentrated on or set a priority is helping those beginning farmers buy real estate with up to $250,000.
And that's the challenge, right? To get, if you don't inherit a farm or not part of a farming operation, access to capital at a young age or a beginning farmer age, sometimes that's a little difficult. So this certainly can help.
You're correct, Joanna, is having the down payment could be a challenge for them, where we could provide that stopgap working with their primary originating lender, which means we could do 100% finance. And now a way to mitigate the risk of the originating lender and Kentucky Ag Finance Corporation is to bring in the Farm Service Agency, which does the lending as part of the USDA. So they do loan guarantees as well as direct loans as well. Again, where we can help working with originating lenders, the lower interest rate, and we will take that second or subordinate position to that primary lender. So a lot of our lenders are under a bank examiner supervision, so they're limited on how much they can loan out and at what rates, so we can help fill that gap in. And then of course you got the Farm Service Agency that can provide direct loans as well as a guarantee on the whole loan. When I get calls, Joanna, I always say go to Farm Service Agency and talk to them. They're going to have the most attractive rates and long-term rates and interest rates when you're looking at structuring a loan. The challenge is the funds are not available, or if you're on a time constraint there of a motivated seller, then that may not work, time constraint. So then you want to go talk to a lender that you have a relationship, could be just a checking account, and go visit with them, and then they can call us and we can work out the arrangements where they make an application to our office, and we may still end up using Farm Service Agency to guarantee the loan.
And if you have questions, you can always contact your local extension office and we can help you, direct you to the right person to talk to. Appreciate you watching the Farm and Home Show, and we'll see you next time.